All right. What's going on, YouTube? So, Clearfield got earnings coming up here. So, I figured I'd post a video before we go into the week and talk about Clearfield, some things that I've noticed, and some things that, some catalysts that may or may not be coming around the corner to be on the lookout for if you're interested in following this company. So, if you're interested in following this company, I am. And periodically my YouTube channel is going to put out videos about Clearfield. So if that's something you're interested in, consider subscribing and hitting the bell notification if you haven't done so already. All right, Clearfield. Upcoming earnings is going to be the 9th, which is scheduled for this next coming Thursday. And that's going to be post-market. So after the market closes on Thursday, Clearfield's going to report earnings. All right. So Clearfield's a really interesting company. I've been ever since shout out to Baby Prince for mentioning this company. So but yeah, let's look more into this. So when I look at this company, this is a cyclical play, and if you're getting into this, I would consider it a balance sheet play. So let's look at the balance sheet on this thing. You notice this big influx of cash here. Let me go to quarterly. This was infused after a capital raise when the stock was dramatically higher, and they did the acquisition of the Nestor's cables. I think that this move by management is good. All right, so it shows that they know how to. The timing of when they raise this cash is pretty much a slam dunk, like a really good timing in the market to do it. Capital raising was cheap. There was a bunch of flush capital out there after all the stimulus and 0% interest rates and what have you. So, and it was a great time to, I don't know, maybe arguably not a great time to acquire, but if they got a good deal, they got a good deal. All right. So they're earning interest off these notes with the short-term investments probably into treasuries. So that's good. All right. Something I'm noticing though is their inventory levels are actually, not surprisingly, their inventory levels are going up rather dramatically, which is okay. Now I am a little bit worried about, because I don't know their actual capacity to hold their inventory. It seems like their profit margins, we'll go back here, their profit margins are down negative 12% off their 5-year average. So the inventories might be having something to do, along with the acquisition of Nestor cables, that might be compressing their profit margins. All right. So something that I might like to see with these cyclical plays, the time for them to buy materials for the upcoming demand coming probably later next year or the beginning of 25 is, and people are going to say that this is crazy, but in all hindsight, if I was looking to invest in this company, this is something that I'd be looking out for. If they were to do something like buy or acquire a distribution center to better position for the upcoming demand, and buy a bunch of the materials, the fiber materials, or to add to the inventory while it's cheap, while there's no demand, while the whole industry is having a problem. If they can get a bunch of that front loaded while it's cheap using their war chest, that'd be something that's impressive to me. Probably a lot of investors are not going to like that if they do that, because there's cash leaving the business. So stock might go down because of that. But for a long-term catalyst, that might be something strategically, like to a thesis that an investor might be looking at to make make that investor more bullish on the company's capabilities for future demand for revenue growth. Okay, so that said, that's one thing that I've noticed, the inventory levels. This company is trading close to book value. It's getting down there. I think there were some comments about if it was going to hold support or not, and we're not out of the woods yet. I'm tracking the company did go down to around shy of 23 a share. Now it's back up to 25, shy of 26. But that's the whole market, all right? So in the earnings coming up, when it comes to technicals, they're automatically going to get overlapped by fundamentals. So some sort of fundamental catalyst happens, it's going to shoot the stock up or shoot it down based on expectations and guidance, numbers, etc., and valuation. All right. So this is not a cash flow play. All right. And this is what I mean by that. If you've been watching my channel, the Crocs, the Crocs company that I've been investing in, that's a cash flow play. All right. So when you're relying on a cash flow play, you're essentially, or at least is the way I see it. Other investors can see whatever they want, but whenever I see a cash flow play, the actual gains that I'm getting are from the actual business entity itself generating the money coming back to me as the owner. All right. If you're going off a net income play, all right, you're more so relying on corporate profits and the actual rate of profits that are gained and going back into the stock to attract inflows from other people buying the stock, pushing the stock up. Okay. So those are some things to consider. They're different things. Cash flows are simply what's cash coming in and what's coming out. Net income are the actual earnings and profits. Okay. So if you don't fully understand that, I'd recommend doing more research or learning on that. If you want me to do a video on that, I can. Comment down below if you'd like, and I can get more into detail with that. All right, so another thing with Clearfield. All right. Oh, once again, all right. Backtracing. All right, I'm sorry. Here's the levered free cash flows and the unlevered free cash flows right here. 1.4 million, 1.5 million is a drop in the bucket. Okay, the yield to the market cap to free cash flows is not even worth mentioning. All right, so once again, you're going to go off the net income when you're pretty much projecting out the future of where you're going to get your gains. Is when their revenue growth reaccelerates, when it's time, more investors are going to come in and buy this thing. Now, I want to talk about some risks and some catalysts that might be coming around the corner. I'm under the impression, and I'm tracking that that this is an S&P 600 small cap company. They got inclusion into the S&P 600. They replaced Celsius on August 10th, 2022. Now, here's the thing. The S&P 600 standard for market cap, they have to maintain a certain market cap to stay in this index. And that's between 850 million to 3.7 billion. All right. Now, right now, they are sitting, their market cap is sitting at shy of 400 million. So they're about 450 million dollars short of market cap to stay into this indice, or to stay in the S&P 600. All right. So they're probably going to receive a letter, all right, from the index saying that they're probably going to get booted, and they're probably going to get replaced by some other company. All right. When this happens, they are going to lose institutional inflows, and all of these institutional firms are going to flood out of this company because they have rules that they have to follow. All right, like they're forced to buy this index or that index, the S&P, the NASDAQ, whatever. They have their own rules. And whatever bunches or portions of these financial firms have to invest in the S&P 600. Once this company gets booted off the index, the market cap is going to drop. All right, because the actual market cap is going to be determined off people buying and selling the stock. All right, so if a bunch of institutions are going to be forced to sell the stock, this thing's going down. Watch out below. We're coming through. All right. Let's look at earnings estimates. For PE. All right. We're projecting, or analysts are projecting, a little over 43% negative EPS. That's going to put a forward PE of about 22. All right. Currently, forward PEs for the S&P 600 small caps are averaging 11.3. All right. So there's like we're double the average valuation of the small cap. As in fact, we're over the valuation of even the S&P large caps. All right. So that's not good. The way I see Clearfield is, if I'm gonna invest in this thing, all right, and if I'm a long-term investor and I want to get into this industry, this is a long-term setup. I'd probably start averaging in now, not really heavy, just maybe a third of the cash flows that I'm contributing into my portfolio. I'd just start averaging in every month until I hit a certain point to where I'm comfortable holding as much as I want to hold, 5,000, 10,000, what have you. This isn't financial advice. This is just something I would do. All right. I do see that this is probable that this is going to drop unless the whole market just keeps going up, which may or may not happen depending on interest rates. This thing, I can see this coming down with more catalysts to go below book value, which I don't know if I mentioned. I think I did. Book value is $20.44. If they get booted off the index, this thing's going below book value. All right. So something to consider. All right. Let's look into the technicals, and then we'll end the video because I don't want this to be too long. This thing went down to around 22.90-ish something on the low, and then rallied back up when the whole market was rallying, and now we're more so going to start on a downtrend again. So I see this going to bleed back down. I think on another video that I mentioned, the past video I mentioned, I said there was going to be a dead cat bounce right here. That's what this is right here, if you're paying attention to this chart. And I said we'd bleed back down, which we did. Then we're going to see another, and then we saw another dead cat bounce right here. And we're probably going to bleed back down. As you can see, here's the down trace of the chart on the bearish. There's a bearish down trace going on. All right. I don't see any positive catalysts coming up for Clearfield. I see nothing but negative catalysts coming up until towards the end of 2024. Who knows? And who knows? Maybe on the earnings coming up on Thursday, we get a little positive catalyst and we get a pop. And even if we do get a pop, stock's probably going to bleed right back down and give away all of its gains. That's just my projection. Once again, there's no crystal ball, and this isn't financial advice. I hope that y'all enjoyed this. Enjoyed this little update on Clearfield and some of their angles and some things that I'm watching out for. If you found value out of this video, consider subscribing. Hit that like button, and I hope you all have a good week. And stay tuned because I'm going to do another. My next video is probably going to be on Google. So stay tuned for that. Thanks and have a good day.